Welcome to my YouTube channel. In this video I'm going to be showing you a very simple forex trading strategy that has a high win rate of above 90% as long as you follow all the concepts that I'm going to give to you. The strategy is very simple. We follow market structure, we follow the direction, and then we map out our order block that caused the last order block that led to that move, and then we enter our trade as you can see here. But before we go to the chart, let me first explain it to you in a very simple way. So let's start with the market structure. Number one thing on my checklist is market structure. So let me add a text box here. So market structure. So what is market structure? Market structure is the way market is moving, as simple as that. So market structure has three types. We have an uptrend where market is going upwards, breaking structures to the upside, and we have a downtrend where the market is going downwards, and then we have a sideways market structure like this one here, where market is just going sideways. So this one is an uptrend, then this one is a downtrend, then this is a sideways market. This is a sideways market. Sideways. Yeah. So when you open your chart and you find it moving in an uptrend, this means we anticipate for buys. An uptrend means that the price is moving up, so we only have to buy in this type of market. Then in a downtrend, we can only sell. That means that the market is moving downwards. Now, how do you take your trade? Because it's not that you will find price anywhere and you just buy or you just sell. So I'm going to add some other few things on my checklist. The first one was market structure. So we go to the origin that caused that. No, we go to the break of structure, BOS, before we go to the origin. Now, a break of structure is when market breaks a resistance or a support zone. For example, in here, this one here is a support, this one here is a resistance. Let me change the color for this one. This one becomes it's better to make it like blue. This is a support, this is a resistance. So when price breaks here, we consider this to be a break of structure. This one here. So we mark it as a break of structure, BOS. So in this strategy, when price breaks a break of structure, we tick on our checklist. That is the second thing we look for. Uptrend or downtrend, that is market structure. And one thing I forgot to talk about, when the market is moving like this, sideways market, you don't trade. You just sit and look at the market. You don't even have to do anything, because here you're just risking your money. But if you, there are some strategies for scalpers that can work here, but for us, we are here. I'm not a scalper, I'm just a intraday trader. I'm a day trader, so I only hold trades for at least one day. Now, after the price breaks structure, like here, the next thing we look for is the origin. But before that, let me first show you the same thing here on a downtrend. Now on a downtrend, the market is only breaking structures to the downside. That means we are looking for sales. So when price breaks here, when it comes and breaks here, we wait for a retracement so that we can sell again. Now that is what I was saying. In a sideways market, you can't do anything because there is no break of structure. Everything is just between two support and resistance zones. Everything is just between here, like this. And in this case, you cannot do anything, because if at all you are to sell or to buy, there is no break of structure according to our strategy. But some support and resistance traders can get trades here. Here, when market taps in their support zone, in their resistance zone, they sell or they buy. Now, we get back to our break of structure. I was just showing you that on the sideways market, you can't get a break of structure, and hence you cannot trade. Now we go to our downtrend. In a downtrend, it means market is breaking structures to the downside. Let me first remove these zones for clarity. Now, it means that the market is breaking structures to the downside. This is our first break of structure. Let me broaden it. Now this is our break of structure. So when the price breaks structure, we go back to our checklist and we check for one more thing. I'm going to add our next thing we check for is the origin. And in brackets I put order block. Now an order block is simply the last. It's simply like the last candle before a huge move. I'm going to first show you an example of another block here using drawing tools. Then we shall see what another block means on the graph. So if this is our candle, first candle, if we are in an uptrend and our chart is like this, for example, these are our candles. So this one should be red, this one. For example, we are in an uptrend and you come and find your price here. So another block is this last candle here before the huge move. So you come and highlight it. This is where you will wait for price from to tap in and then you buy here. So the order block is this last consolidation. When you go to the lower time frame, it is usually like a consolidation, but when you go to your higher time frame, it becomes another block. So I'm going to also take you through the different time frames that I use as a day trader, because you have to do top-down analysis for accurate entries. Now, this is the order block I consider. Now, which order block do you consider? That is the question. Or why did I add the word origin instead of just adding another block? When the price is moving, for example here, when the market is moving, you can even find another block here. You can even find another block here. Now, first we consider the very last order block that caused a break of structure. Yeah, because order blocks can even this was an order block, but if we are to take a trade, we consider the last order block. Let me draw it for you here for clarity. If price is moving like this, and it breaks a structure here, remember we look for market structure, a break of structure, and now we are on the origin. So the origin has to be the very last order block here. That is why I put order block, then I put the word origin in brackets. It has to be the very last one before that move. So if at all there's no order block at the extreme here, that means our strategy is incomplete. So there we don't trade. That is being in this field in Forex. That means you're just trading for the sake. But if we get our origin as another block, our last selling candle before this buy move, that is what we do next. Then after that, we look for liquidity. Liquidity can be different things. It can be double tops, it can be double lows, it can be all that. But in my case, I usually consider liquidity as the other order block that is not the point of interest. It is like the second point of interest before our main point of interest. That is how best I can explain it. So when market comes and taps there, it pretends as if it is going to go back, yet in actual sense it won't manage, because it is actually liquidity. It has to be cleared, and then we tap into our point of interest, and then we buy. So I want to show you this on also a downtrend. If it was a downtrend, what would we do? So let's say this is our downtrend. We go circle to the downside, we go circle to the downside, we go circle to the downside. Now here you come and look for your point of interest here. Then liquidity is usually the other. This is a lower time frame chart that I'm now doing. I'm going to change the color. Now this is the liquidity. It is usually here, like on this low. You find like there's a cast. Let me first organize this. You find there's like a small order block here that pretends to hold price, but in actual sense it doesn't hold it to continue going down. So when it stops in there, we usually wait for it. It usually bounces, but you have to be patient and wait for it to come to your extreme order block. Then you can buy. Then you can sell, because this is a downtrend. This is a block of structure to the downside. So let me clear all this and I go back to my main thing. Now here, when all this is, when we go to our checklist and find we have a break of structure, we have our market structure is upwards, we have a break of structure, we have our origin. Now we come to our last thing, which is most people call it a fair value gap, but me I call it imbalance in brackets and a fair value gap. Now for an order block to be valid, it must have a fair value gap. A fair value gap is the gap between the previous candle and the first candle, like you can see here. Now this one, a fair value gap is this gap here between the order block space. Let me change the color. Between the last order block, the last candle that you marked as your order block, and that's the second candle. So it is usually the other third candle between there. So we wait for markets to first also tap. Some people buy from here, from these zones, but usually they are liquidity. Me, I don't buy from here. But if you are at all to buy, you just have to wait for market to tap in your order block to close the fair value gap, tap into your order block, then you buy. For security reasons, you have to protect. You remember, as a forex trader, you have to protect your capital first. Now, this is the imbalance I'm talking about, and I'm going to show it to you on the chart. If you are trading smart money concepts, specifically the strategy I trade me here, my first thing is market structure. Break of structure, and origin, liquidity, a fair value gap. Now let me show it to you here. A fair value gap is usually here. Remember, these are candles. This is just an illustration. But a fair value gap is the space that is usually here before you tap on the other extreme order block. The gap between two candles that didn't manage to clear the imbalance below in an uptrend. So in a downtrend, let me show it to you in a downtrend how it looks like. And in a downtrend, let's say this is our origin. Let us say this is our origin. So the fair value gap is usually like here, around here. That is the fair value gap I consider personally. That very last gap before the other continuation. So it is called an imbalance or a fair value gap. Now, that's why I told you that in this type of market you cannot trade, because all the things I've talked about can't be found in this type of market. You cannot find an imbalance. You can't just, even if you identify your order block, it will be disrespected, because the market is in a sideways movement. So let's go to our last illustration and I show you. This is all I do when I want to trade liquidity. And as for me, I added something to my liquidity. I trade the London session, and usually before the London session on GBP USD, I usually trade GBP USD. There is another thing I incorporated in my forex trading strategy: the Asian session. The Asian session is usually liquidity that price usually clears out and then continues to our direction. Yeah, I want you to backtest this strategy and see, and test it yourself. This is my complete strategy. So I added more liquidity confirmation as my Asian session. The Asian session is usually liquidity that price clears to continue in its direction, whether it is a downtrend or an uptrend. It usually clears the opposite side before the other side where it is coming from. Let me show it to you on the live chart. Now, this is my favorite pair, GBP USD. Let me first remove all these. I want to show you strategy very well. So as you can see, this one here was a downtrend. We'll first change this color to an orange. So this, you can see this was an uptrend. Okay, it was an uptrend, but it broke structure. It's changed character. I also want to teach you about the change of character in my next video, but for now, let's first concentrate on a break of structure and simple market structure. Okay, so this one here is a downtrend, as you can all see. But I usually get confirmation from the higher time frame. My higher time frame is the 4 hour. Now let me add my text box for time frames. Now time frames. So when I come to my trading plan, and as a forex trader you must have a trading plan, as you all know. So time frames. So on hour is the higher time frame. Then my 15 minutes is my lower time frame. Then I enter my trades on the 1 minute. If at all I want to use confirmations, the entry time frame. If I'm to use confirmations, I use the 1 minute. I use 4 hours as my higher time frame, 15 minutes as the lower time frame, then 1 minute time frame for confirmations. For example, in this trade I used confirmation as I'm going to show you. Now the market is moving downwards. As you can see, that the chart of this day wasn't appetizing, but it did what we expected, so we had to trade. Let me also remove this. Now when I come to my trade, I first of all identify the market structure, and as we can all see, this is a downtrend because it came, it broke structure to the downside, broke structure to the downside, did the same, it came here, it kind of went back, and then yeah, it went down, as you can all see. But my interest is here. So as you can see, this is the same thing that I had drew on the plain chart above there, but here it is on the, I wanted to keep on the graph so that you understand what I was talking about. Now I talked about a break of structure during the other chart. So this is the break of structure I was meaning, this one here. This is a break of structure. As you can see, after it broke structure, we come to our checklist and look for the next thing on our checklist, which is the aftermarket structure. We look for the break of structure, which we have here. This is the break of structure. Then we come, the next thing on our checklist is an origin or an order block. Now you have to, we don't take any random order block, because as you can see, this one can also be an order block, but as I told you, not every order block has to be considered. This was liquidity just. So we take the extreme order block at the end. As you can see, this order block here, it's what I mapped out. After getting the order block, our next thing on our checklist is liquidity. And as I told you, Asian session is usually manipulated to get the real move. Asian session is usually manipulated to get the real move. As you can see here, market was in a downtrend. It had to manipulate the Asian session, then it had to move. The same thing happened here, even before our trade was complete. Price had to come and manipulate the Asian session before moving down. So if you want, you can first confirm this on your charts. Go and highlight, go and turn on, go to your indicators, search for Lux, go to your indicators, then go to the search bar and type Lux Algo sessions, Lux Algo sessions here. Turn on this session indicator. This session indicator helps you identify. As you see, when you turn it on, it will come like this. So you will have to modify it and remove all these sessions. Let me do it here to all see. So you go to the settings, remove the New York session, remove the London session, remove also remove the day, these range levels, and only leave this session. The Asian session it is also called the Sydney session. Then as you can see, let me first hide this. As you can see, this is the whatever I've just added. You can also continue and remove these day ranges on the same indicator, but I already did it on mine. So let me turn on mine. This is the one I had already used, the already modified one. Now when you come here, Asian session is usually manipulated. As you can see, it was manipulated here and here. It doesn't happen every day, but once it is manipulated, that becomes an A plus setup. So that shows that market is clearing liquidity for the real move to go down. Now, let me first remove this. After it was manipulated, after price came down here, we wait for it to clear this, to come and clear it. If it is in an uptrend, we wait for it to clear the downside of it before going up. So here it is a downtrend, so it has to clear this upside, then it goes down. As you can see, it already happened. Now we go back to our checklist. We have the liquidity, which is our Asian session, and we also have this order block that I had already shown you, this one here. Now we go back to our checklist and see what else. Liquidity, we have our liquidity. Our last thing is the imbalance. Now you come here for your imbalance. For the case of the imbalance, I told you it is the last gap between the last and the third candle. You see, we marked our order block as this, and then our fair value gap is this gap between here. Let me use a different color. I want to use red. Here, this is the fair value gap here. So this adds to my confirmations that actually when this order block is tapped in, it will be able to push the market downwards, because it has all my things that I consider. That's why I entered this trade very confidently. And as I'm going to show you, we are going to go to the regroup and I show you the confirmation. So let me first remove this fair value gap and put a better one. Now we go back to our checklist. Is everything intact here? Is our market structure marked properly? Yes. Do we have a break of structure? Yes. Do we have an origin or an order block? Yes. Do we have the liquidity? Yes. Do we have the imbalance? Right. Now we come to the entry. On the entry, after confirming all that, that's when you place your sell order. I use pending orders, but sometimes I use confirmation. But for the case of this trade, I did use confirmation entries, but for the sake of this video, I don't want it to be so long. I will make another video talking about a confirmation entry on any other trade that I take. But for now, I am going to show you how I placed just a pending order. I just placed my order here. But before I show it to you on the live chat, let me first show it to you here. Now, by the way, this illustration here shows the complete strategy that I use. Now, after finding all these things intact, I come here and place a buy entry. If it is an uptrend, I enter a buy like this. Then when it taps in, it obviously goes up. If it is a downtrend, I do the same. After mapping my origin and price taps in, I just enter my sell position. Like this. And I target the very next break of structure. It is here. And I'm going to use this thing because I'm going to show you my trade in a downtrend. And my SL is just a few pips above the origin or the order block. Just a few pips. And then I just wait for market to tap in and go down. Now let me go to the chart and show it to you exactly what I mean. My SL is just usually above there. Then my take profit is at the very next break where I expect markets to clear liquidity. Usually these are pockets of liquidity, the next break of structure. So my TP is here, and as you can see, it played out. as expected. Now, if I told you you want a winning strategy that has a high winning rate of above 90%, consider this strategy and always think about the liquidities that I've talked about, the Asian session. The manipulation of the Asian session means a lot to the market when you see it being manipulated. Now, let me show you an example in an uptrend. As you can see here, this was an uptrend, but it came and manipulated the Asian session. Then it went up. Market was moving up, but after manipulating that, it had to first come back and manipulate the Asian session, tapped into the POI here, and it had to move up. This is the power of Asian session manipulation. As long as you see the Asian session being manipulated, just enter your trade. Let me summarize it here in brief. Order block, FVG, fair value gap, liquidity Asian session. Just wait for markets to manipulate the Asian session, then you enter your trade. Just like this, you enter your pendings here. Stop loss above, a few pips above the origin, just like this. This is a very simple trading strategy, guys. And as you can see, I already have a trade that is running using that same thing that I've just shown you, the manipulation of the Asian session. After it is manipulated, we wait for another move. As you can see in my trade, even this one even happened yesterday. After the manipulation of the Asian session, it had to give us the real move. Same thing here that I'm waiting for today. Now today, I had the order block as usual. It was on my 15 minutes, the very last manipulation. My favorite gap was on the 30 minutes time frame, which is here. As you can see, this gap, the last gap. Now, what next? Our block of structure was already here. The next thing, you just enter the order, a pending order on the order block. You target the next pocket of liquidity, which is the next the targeted high, and then just trade like that. It is very simple, guys. So this is the trade that is currently running, and I'm hopeful that it will go to take profit, because there's no doubt here, all my confirmations are intact. Thank you so much for watching my video. Consider subscribing and sharing to the people who might want to learn Forex, specifically smart money concepts, specifically simple things. Thank you so much.